All right, we need to jump into the SP 500 and the Nasdaq 100. We're talking about exactly how we moved on the day, where we're going, and essentially what I was trading specifically on the day. We saw an initial drop as we started this market with the Nasdaq specifically, but we need to talk about why I am expecting some upside going into today, Monday, and Tuesday tomorrow. I'm going to cover some of the big news that we have coming this week specifically and the main bullet points we need to be watching, especially if you're day trading in this market. Now, if you're swing trading, we can look at a bit of a broad-based viewpoint of this market, but let's jump into this. Now, before we get into that, ask you to consider doing two things: liking and subscribing. Every day I'm making these videos for you so you can stay prepared, and I'm giving it to you straight, unbiased, and I'm telling you exactly what I am doing as well every single day here in the market. Now, before we get into anything too in-depth, I do want to cover some of these bullet points, and these are going to remain the same. And each week, I'm going to highlight key things that I'm watching so we can continue to watch how they're impacting the market and really approach this from an educational standpoint as well, so you can understand the logic behind my viewpoint when it comes to trading here. Now, as we're looking at this tomorrow, obviously, this is going to be coming in full circle, November 8th. Your end of elections. That's going to be big. Now, we also have Thursday CPI. We're going to need to talk about this here in a sec, but this is going to be very big, very important. And then obviously the underlying factors, DXY, which I believe had a huge impact on the day. Yields, which is a slow killer in my opinion. Some earnings that we're going to have today. We already saw a few of those come out. And then obviously China policy, which continues to be bad. If you don't know, China will have CPI pretty soon. Also, these are all big concerns you need to be watching. Now, we look at indexes, what happened. Now, as I mentioned yesterday, I believe that we would see upside going into the beginning early into this week. You can also check my Twitter if you're interested as well, because I posted it there. Now, I did not trade for a primary part of the day. For about half of the day, I didn't really touch anything. I closed my Disney position this morning, and I also posted that, and I shared that with everyone here. Now, I like to be really transparent about how I trade and what I trade, because people need to understand you're going to win and you're going to lose. However, today was a pretty nice winning day. Now, coming into the market, I told everyone on the close of Friday that I was going long on Disney, made about $700 on that trade, ended up cutting and trimming those. It was about 245 at market open. I couldn't close at a broker issue, ended up closing around 228. And then I ended up trading CRM to the end of the day, made a pretty penny there. We'll cover that here in a sec. That's essentially what I did on the day. I've been pretty slow to act here just based on how you were trading. If we look at basically the past 24 hours and specifically when markets opened, so markets opened about right here. I'm going to highlight this really quick so you can see. So this is essentially your market open. You open right here, you get an immediate downshot, and essentially into the end of the day, going into power hour, basically 1 o'clock right here, you just sideways chop. Going in after 1, you can start getting the upside in the breakout opportunity here on NQ, getting above that supply zone. And if you want to see these supply zones, it's also on Twitter. That's why I recommend following there, so you can stay updated with my charts and my way of thinking, because I can only post on YouTube 1 time a day, right? So these are things to be watching and ultimately looking at. But for the better part of the day, you didn't have that much action. I mean, if you really look here, you were basically trading in a 50-point range up and down here on Nasdaq. And it gets even smaller when you look at something like ES, and it starts to just contract even more. It was really just, back and forth, basically from here to here, just nothing. This was just piss poor trading, right? So that was the concern going into this, is just seeing how it was moving and not forcing any trades. But in my opinion, I didn't see too much downside. Now, why didn't I see downside? Well, even here on the trading day, you can see what was happening. Obviously, coming in here, just really quick, you can see you're making higher lows across the board on the day, right? So you gap down, but then as you can see, the going trend looked good. Higher highs and higher lows. This is usually pretty bullish, and you end up getting towards that resistance and eventually breaking out. Same thing goes for NQ here. Again, you can see it right there. I'm not making anything up. You can see the writing is right there on the walls. Higher lows across the board. Pretty good trading overall, did really well. You can also see that you start to make a base and support based on your previous highs he had established late last night with futures, right? So futures started barcoding here, you dropped down, eventually got it back above, and that became your support, and you bounced continually through that range, which eventually you broke out through this. Now, what to expect going into tomorrow and big things and big factors. Now, we know midterms do end tomorrow. So in my opinion, I think you had to just speculate that the markets were going to remain towards the upside going into these midterms, right? And so far they are. Now, we have June lows right here, about 1106. This was your previous 52-week lows, right? You've heard me mention it nonstop here on the channel. You can go all the way back and come in here really quick. We can highlight it right about here, I do believe. No, we have to go back a little bit more, if you will. This is September. We need to go to the daily chart really quick. And you can see right here is where you're at. And that's ultimately where we are. I don't know why TrendSpider has it a little bit messed up, but it's a little bit higher. It's 1106 where your June low was on NQ. So you're there right now. I anticipate this to be a resistance. It's going to be a little bit of a struggle. So I ended up closing all my calls before market end, right? That's a very big level. It's been written on my Twitter for a while. I do believe we have upside potential past that. But I'm going to highlight right now. This will be the biggest factor into this week, in my opinion. Right here. The CPI. It's going to be very important. I essentially think everything until that point is just nonsense trading and almost irrelevant. So I do want that to be known. I think everything else is important. I think midterms, yes, it'll give you a structure of what to expect into basically Wednesday. But I believe CPI is the end-all, be-all here. And it's the thing that you need to really focus on. I have a lot of traders messaging me and saying, well, don't you think this is just a fake out, this and that? I don't operate on what I think, okay? That's not how I trade. I don't operate just based on hunches and, assuming things are going to happen and betting only. I don't operate. That's gambling, okay? That's not what I want to focus on. Every time we've gone to these Fed meetings, we've known what to expect based on the data released. And Thursday is going to give you this data on CPI. The Fed already told you if CPI continues to come out poor, that what they're going to do. They're going to keep rate high, and they're going to continue to raise these rates. So I don't believe they'll slow down if CPI continues to come out piss poor. So again, all focus leads right here. That's what we need to focus on. Thursday morning, CPI, end all be all. Now into this, I could see the potential for day trading towards the upside. And so I think that's what you have to look for right here. One, what are we looking at? You're getting above the 11,000 range right now. That's good. Now, again, I got to be transparent here. And people will say I repeat myself, but I repeat myself so I can't be misinterpreted or twist my words, right? I like to just have a foundation of integrity here and to make sure that I'm being very transparent. So I did close my positions because I acknowledge this 1106 range is very important and it's a monster level. So you have to understand the 1106 is a very big level. If you get above this, I could see you easily coming back to 11.3 to 11.35. And I know people are going to say, Tyler, you're bullish. Are you? I mean, where's your viewpoint of the market? I thought you're bearish, right? And I am. Long term, I still think we have a ways to go toward the downside, and I believe there's more room to go. However, you just don't know what's going to happen from CPI. You don't know where we're going to be. And we've been very surprised and shocked across the board multiple times here. Now, if we look at the broad-based market, the US30, the Dow is bullish. It's extremely strong. We came right down to that level. You had a little bit of a wick, but you're bouncing there. It's clear as day, making higher lows here. And you're pushing up. You're very strong, almost pushing back above relative highs we had back from Friday, and Monday. This is, worth mentioning from last week. These are very big levels that you're at now. So it's important to realize where you're moving and tracking this movement. The Dow is the sector. If you want to go long, that's the sector you got to be going long on, the DIA. That's the move right now. Like I've been saying, if you're looking to trade the upside, you can try to trade tech, but it's definitely more incentivizing. And go watch my video from yesterday to trade ES or Dow towards the upside. They're just moving better overall. Don't get mad at me. Don't, try to attack me. I'm just giving you my viewpoint. Right now, we can also see ES getting rejected off of 38.20. I highlighted this inside of Discord right when I was getting out of all my trades. Right here, you could see a clear liquidity wall right there at 38.20. Massive level was your previous high you had back on October 6th before you pivoted back down. So that's where you're at right now. If you get back above this level, I could see you easily coming back into the range of around 38.70 to lower inside 38.50. Again, you have that momentum if you can get above these levels. That's all it's about here. It's about getting and flipping supports or resistances and turning them into support. And that's the primary way that I'm looking at trading this market right now. Don't overcomplicate it. Don't start assuming things are going to happen. Just continue to watch the way the market's moving. Just like we were looking back here. You had a low, you broke below it, and guess what? It became a resistance. The same thing here. If you break back above it, it'll become a support. So make sure you're looking at that. Now, again, Don't confuse short-term trading with long-term aspects, okay? They're very different. I make a bulk of my money when it comes to swinging. I do make money day trading. It's profitable. I can do it, right? But I acknowledge the biggest moves and the most profitable moves come when I'm looking at swinging. For instance, when we were in those Q puts back here at the top, those made us money. Those made us the most money. The day trades are cool, but we know this is where we're going to make our big types of money when it comes into these very pivotal moves. And again, I think maybe I've come across as too bearish overall sometimes. And I do view the market this way. I view the market as we do expect downside. And when we're looking at the markets and some fundamentals I'm going to talk about in a sec, there's a clear reason why we're getting the upside right now. But if this data comes out good, CPI, I will flip to being bullish all the way into December. You need to understand that. Until the next Fed meeting, if CPI comes out strong and reports decent aspects, I will be a bull. You need to understand that. So until Thursday, I'm going to be pretty liquid. I might get in and out of trades, but I'm not looking for swings until CPI data. There is no reason to bet on this data. Just wait for it to come out. There's no reason whatsoever. If you're looking to short, for instance, Qs here, you're going to be doing yourself a disservice, because when we were looking to short before, we had tons of room towards the downside and the trade just made sense. Just food for thought, showing you the visual here. We were going short roughly at 281. Stops were above previous highs that we had, and we were looking to trade this all the way back down to lows. At the minimum, back down to 267. Guess what? It played out perfectly down to 260. It was a solid win. But if we're going short here, your stops, you have no clear area. I mean, you have to have stops almost to this level, and you're looking to go into uncharted territory. It just doesn't make sense at that point. Now, you can try to have stops here or there, but chances are, and there's a high possibility, they will get stopped out. So that's my concern when it comes to looking at this, and it just makes more sense. Everything I do here is mathematically driven and based on statistics. I'm only going to take a trade if the reward looks to pay out. I'm not looking to force trades. I'm not looking to, take an exorbitant amount of trades. I'm looking to take trades as long as the risk reward makes sense. And for right now, the short side doesn't make sense for me here. I think it's hyper aggressive and it just doesn't make sense right now. Now, if we look at Bookmap, you're going to get a better viewpoint. We can see all day long that 38.20 was a major level and there was a lot of liquidity. I mentioned it earlier. If we look here also, I want to highlight, you did take that out before market close. You took out 38.20. You bought right through it. That seller was taken out and he did not put more orders there. Worth mentioning. So if you get above this level, I could definitely see some continuation kicking in here, right? Very important to realize. If we look here also, you can see our CVD, the green into red, right? It tried to flip into bearish. However, it continued to maintain that bullish aspect throughout the day. And then we also saw around lunchtime, noon, we saw a big order of icebergs kicking in towards the upside. This is when I started to go bullish. This is when I started to flip the script. And you can also see they started making a support down here, the bulls, right? You can see they started adding liquidity to hold you up and then eventually pushing you back up, testing 38.20 where we got out of all of our trades, right? So these are all important viewpoints to be looking at. And that's how I'm trading right now. I'm just watching what's happening, going with the trend, following where we're moving, not getting, overextended or anything like that. The next thing you need to look at is going to be DXY. I made a post on this in my last video also. You had a decent open. Okay, I want to highlight. I'm going to go to the 1 hour so you can see. So you can see you had a decent open, you flatlined, and then you dropped. Important to realize you have a little bit more room to go down here, about 60 cents roughly on this overall chart in DXY. This was the big level support. If you remember, this is where we started to go short, right? Because DXY bounced at our major level. This is a huge overall demand zone when it comes to the DXY chart. You have to spotlight this. You have to be watching this, right? So I do expect this level most likely to be tested. And if it gets tested, I will definitely be tempted to go short along with CPI data as well. So those are things that I'm looking at and things you have to keep your eye on. I don't think you can focus on anything else. These are the main bullet points here. But I will say it's worth mentioning, if we look at yields, while the market's going up right now, yields continue to fly towards the upside. We've mentioned the higher lows that were formed here. You can look at the 30, 10, and 20. They're going crazy. They're pushing up pretty strong. I do want to highlight that. This is where you were when you made your all-time lows so far, 52-week lows so far. So keep this on your radar that yields are moving in a very bearish structure on the market. yields still look terrible. If we look at the inversion rate also, you can see here, you're still following the higher low trend. It is dropping, but it's worth mentioning yields are still going up higher. Previously, when we were bouncing on the market, yields would drop. That's typically what should happen, but yields are going up. I believe this could be heavily influenced by midterms and the expectation or hope of CPI. But so far, nothing has changed fundamentally on the market, and these are things you have to be viewing. So, leaving you with this, and I'm probably what I'm going to leave you with for the next 2 days. CPI, CPI, CPI. Watch DXY on the key levels. Yields continue to move up. Earnings, we have a few coming out on the day. I can show you right now before I let you out of here. But overall, you have got to be watching what's happening going into CPI. It's the biggest factor that there is, okay? Earnings, you have the day. Tomorrow, after close, you're going to have Disney, very big earnings, extremely excited. Oxy, pretty big as well. Going into Wednesday, you have Roblox that open, bigger earnings, it'll be okay. And then you have Neo and a few others. They're not as big as they have been. I think Disney's probably your biggest earnings on the week. But besides that, that's what I'm looking at specifically on this week and how I'm trading it. If you have questions, comment down below. I'll see you tomorrow.